Welcome back, everybody. It's Xavier here with the charts, talking a little bit about the end of the month for September, talking about the dividends that we've received for the end of the month. I was going to do this video yesterday, but it's been quite a bit busy. Been very busy with work, and so I wanted to put this out there so that people can see how the dividend portfolio has been holding up. And so you can see, basically over the month of September, you see we've received payments from companies like Enbridge, Pfizer, Wells Fargo, Southern, Microsoft, Flowers, Old Republic, Realty Income, which many of you are probably familiar with, Prudential, Nvidia, BP, Gain, BEP Brookfield, and of course LTC. And so in all, we've received about basically 15 checks. As I like to look at it, I've gotten 15 checks from different companies. And of course, for the month of September, we are totaling just shy of $92 for the month. I believe it was like $91.88, I believe, for the month. And so it's a good healthy amount of dividends. Currently we've got about 25,000 invested currently into the portfolio. We've had quite a bit of swing within the market. We've come down from the peak. We've come down just about 1,200 points. Thankfully, we have not had too much fluctuation, of course, with the portfolio. So we have quite a few down days and some up days. But for the most part, the portfolio has basically remained just about in the same area, about 1,000, 1,200. At one point, I was up 1,600. But again, the purpose of this portfolio is for passive income via dividends, right? So either a company can, for example, like a company like Apple, they can take their money and they can basically reinvest those funds, that revenue that they receive from doing business, and they can reinvest that into the company. And then, of course, you get capital appreciation as the stock rises. Or you can be invested in, let's say, something like Simon Properties, which is a real estate, and of course that company will basically pay its shareholders a dividend, basically for holding the stock. And so every quarter, some pay every quarter, and some stocks, like for example, Realty Income, pay every month, as well as companies like LTC. And so it just depends on kind of what you're looking for. So all these companies do pay some sort of a dividend. But just basically, just about every stock that I hold in my portfolio is a dividend paying stock, or at least was a dividend paying stock. For example, like Foot Locker. Foot Locker previously, of course, did pay a dividend. I'm currently holding it to see stock goes back up into the 40s. I might let it go if retail starts to do well, as basically the country starts to do better because of improvements in managing COVID. Foot Locker could go back to paying the dividend. If it doesn't, I will more likely just sell it for the capital gains, and then of course reinvest that money into a dividend paying stock. That's basically just touching base for the month of September. We had numerous dividends, and this basically is the purpose of this portfolio, is to generate income via dividends. And of course, I've seen this portfolio over the past couple of months. Of course, when I first started, the dividends were a bit smaller, and of course, as time goes by and as I start to accumulate more money into the portfolio, of course, those dividends will become, of course, bigger. Currently at about $286 so far in terms of dividends, in terms of earned dividends. And of course, for the next month, the month of October, will be better than this month. So probably looking for around $120, maybe $130 in dividends. And of course, the goal for this year, for the end of the year, for the end of this particular year, my goal was to average at least 100 a month in passive income from dividends. And we're basically just about on track for hitting that. I'm around like $86. And of course, the goal is to get this portion of the portfolio to 20K. And I'm not that far off. Should probably get there more than likely by the end of the year, if not sooner. But that's basically the goal for the end of the year. In terms of 2021, I've decided to change my goal for Q1 2021 to basically get this up to about 32,000, because my goal is about $200 in passive income for the first quarter of next year. And then of course by the end of that year, I'm looking for about $275 in terms of passive income. And of course, in terms of the market and where the market is at now, we did see a nice rebound. If you had followed in my last video, I had talked about that the market was looking to pull back, and of course we were looking to pull back at certain strategic points where the market had previously pulled back. And these are things that I typically pay attention to, so that I'm basically not buying at the highs of the channel, as markets will typically trade in a channel and either break out or break down. And so I basically wait till I see a pullback, and I'll basically pay attention to where I believe the market is going to pull back. Same thing with in particular stocks. But if I'm basically looking to dump money into the portfolio, I'm typically looking to do that on nice size pullbacks. And so I was able to pull it in about $600 when the market pulled all the way back. You can see that the the S&P literally bounced off of previous areas. The same thing with the Dow, where the market basically bounced off of 26.5, and we're seeing a little bit of a retest of 28K. Not quite sure which direction the market is going to go, as I don't try to predict the market. I just try to pay attention to where the market has been and pay attention to areas of support and resistance. And that's basically how I do my buys and sells of where I'm at basically within the market, and of course within particular stocks. If you had the opportunity to check out my last video, I did talk about Chewy, which is basically like your Amazon for pets, right? If you're a pet lover and you really do, if you're looking for like pet products, Chewy of course is a great company that deals basically with pet products, where your dogs, cats, birds, etc. And so in my last video, I talked about how Chewy more than likely was going to strategically pull back to about that $52 area, and I said I was going to be nibbling at 58, and then of course taking the majority of my bid being between 53s and 52s. I had tweeted out last week that I had sold some of my Chewy. I think it was on this particular day. I sold it at $57, and I still had half of my position, and that was basically in my TD America. Prior to starting a M1 IRA, I had actually another IRA with TD American. I utilized the Thinkorswim platform there, and of course I had bought some Chewy. I only had bought about 20 some odd shares of the stock. Basically I had an average of about 54 and change, and I basically sold half of it at 57, and I got out of the rest today at 58 was my sell. Chewy may go up. I still do have it of course in my M1, but in terms of just taking quick profits on that particular little move to the upside, I decided that was going to be my out. I took about 3.5 points or so, about 3 points on that trade, and basically just taking little profits here and there, trying to build up the IRA, as I did take a little bit of a hit previously in Ford, and I was well in SKT, and I wasn't paying attention during the downturn. I lost a little bit of money, so I'm trying to make that money back. I had an update today of about $128 in that IRA, and but most of those are in stocks that are long-term, like Store, Wells Fargo, Gain, Iron Mountain, Enbridge, Coca-Cola, etc. So I've got quite a few positions that I'm looking to build upon, and of course that portfolio as well is for long-term income dividend play. Again, my purpose of making this portfolio is basically cash flow, one that I could utilize now, but more importantly utilize for retirement, as I am looking to retire early. So basically what I'm looking at for the month of October is going to be Microsoft. I did buy a little bit of Microsoft, like I had talked about in my last video. Microsoft did come down to that 200 level. I hope you were paying attention and were able to get in. As you can see, the stock is now at 212. I did sell some of it at 4s, and I sold some of it at 8s, and that's basically, and I took my out in my short-term portfolio. I only had a handful of shares. I bought 10 shares, and I basically pieced out of it slowly. Didn't quite think we were going to hit 12s, but I did sell 8s, so I am quite happy. with that trade. But of course, I am looking for Microsoft to come back down, as well as Apple. These are basically the stocks that I'm looking to buy on pullbacks. But of course, my pullbacks might be a little bit deeper than the market is willing to go. My particular in for Apple is at start nibbling at 100 and then average my way down to about the 80s. Same thing with Microsoft. My initial in would be, again, getting back in at 200 and then with a little bit more of a bulk buy at about 188. Currently still watching Wells Fargo, as I do like the stock. The last time I had talked about it previously, we had talked a little bit about Wells Fargo. Was that Wells Fargo on 2 different occasions, again looking back at history of Wells Fargo and looking at the dividend growth of the stock, again during the late 90s, during the crash, Wells Fargo of course cut its dividend, but eventually the stock came back and it rallied fairly hard. And then the same thing again we saw during the financial crash of 2008 and 9, and then subsequently we do see again Wells Fargo had basically brought its dividend back to an all-time high. And of course we're right back in that scenario where Wells Fargo of course has drastically sold off, and of course again has cut its dividend. And so I'm basically paying attention to see if history is going to repeat itself, because we could get multiple years of both stock growth in terms of capital gains as well as dividend growth over what looks like 7 and sometimes 8 years. I'll have to wait and see, but that's basically one of the plays that I'm paying attention to in the current market. This is just a quick update. Of course, if this is your first time here, be sure to subscribe so that you don't miss out on future content. And of course, if you like the content, be sure to hit the like button so that the video gets shared with other people. And of course, if you're interested in making an M1 portfolio, my referral link will be in the description. Thanks for watching, and I'll check you out next time.